Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our two-day Metals and Mining Conference. Our next presentation is from Viva Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome James Hesketh, Chief Executive Officer and Director of Viva Gold, which trades on the OTCQB venture market under the symbol VAUCF and on the TSXV under the symbol VAU. Welcome back, James.
Hey, thanks, Greg. Pleasure being here. So, this is Jim Hesketh. I'm President and CEO of Viva Gold, and we're going to talk about Viva Gold and its Tonopah Gold Project. So first off, cautionary notes and technical disclosures. These are displayed on our website on our presentation. You can read these at your leisure. So Viva Gold, our strategy and direction. You know, what we've done is we've prepared a fully capitalized preliminary economic analysis, which basically confirms that the Tonopah Gold Project can be a producing and profitable mine. We have a high confidence gold mineral resource, 86% of it now in the measured and indicated category. And it's in the very friendly location of Tonopah, Nevada. We've advanced many of our baseline environmental studies, and at this point, we have no material red flag issues that could prevent this mine from being permitted. We've got a highly experienced leadership team in this company, and what we see is a unique window of opportunity to permit a new mine in the U.S., and that's against the backdrop of very robust gold prices. And that's been driving a lot of our strategy of late. So our near-term catalyst that we're going to be looking at for this company is to try to move rapidly into feasibility study and use that to commence the formal mine permitting effort in order to embrace accelerated permitting. And with a permitted mine in Nevada, you typically see a re-rating. And that's what we're really seeking for our shareholders. So looking at the ownership of this company, next slide, we have very robust institutional ownership led by Dundee Corporation. They own a tad under 20%. And then a number of other notable institutions. So we're over 50% institutionally held at this point in time. And that's been very positive for us in looking forward, raising money, et cetera. But we do get strong support from our core shareholders. The team, I won't go through each individual, but this is a very technically astute team who every member on the team has been involved in mine constructions in the past. My personal background, I am a mining engineer and mineral economist by training, both from the Colorado School of Mines. And I've had positions in both large companies and small companies, primarily in engineering, mine development, and mining finance. So in my background, I've built 8 mines in my career, industrial mineral mines in copper and gold. So that's the backdrop of the team that we bring to the table. Now, looking at our neighborhood, it's a very active location these days. Tonopah Gold Project is in the Blue Star. We're about a half-hour's drive south of Kinross's Round Mountain Mine. Round Mountain Mine last year produced about 250,000 ounces of gold. Its production has been declining with the depletion of the open pit there. They've got a few years of open pit mining. That, of course, is changing with increasing gold price, but that horizon gets pushed off. But they are deeply underground at this point. They've driven about 3,900 meters of decline, and that's for an underground extension to the open pit mine. And their real goal is to provide feed to their existing 11,000 ton a day mill as the open pit is depleted. There may be an opportunity for Viva in toll processing some of our ores and or loaded carbon at that site. So that's a ongoing discussion. Now, Centerra Gold, they acquired the Goldfield district to the south of us. They bought it in 2022 for $206 million. And, it's that project, they're looking to expand the resource. The declared resource on that is 706,000 ounces of gold at 0.71 grams per ton. It would be an open pit heap leach. And, that's a potential opportunity for us. There's potential synergies there. And then Anglo Gold, you probably saw last week, they just announced the acquisition of Augusta Gold. And again, Anglo Gold's been acquiring assets in this district. They've consolidated now the Beatty district, and that's about 45 minutes to an hour's drive south of our project. So a lot of activity in the neighborhood, a lot of M&A activity has taken place in the last couple of years. And what you're seeing is a number of majors moving in and consolidating. Again, potential opportunity for Viva. Our recent resource declaration, what we've developed on the Tonopah project, about 2 years ago, we made a decision to concentrate on the core resource at Tonopah. This is primarily in one major pit that you're looking at, and 86% of this resource is measured and indicated. Now, what we've got is a bit misleading because we have two ore types at this project. One of them is quite a high grade mill feed product that we've highlighted in our PEA. And the second is a low grade heap leach. You have we'll discuss it in just a minute here, but these two different types, we've expanded the low grade heap leachable material, and we've confirmed and expanded our high grade material. So let's move on and we'll talk about that in greater detail. So the deposit it's about 1.5 kilometers long, over a half mile in length, about 300 to 350 meters wide, and it's near horizontal in terms of structure. This is not a vein type system that goes to the depths of the earth. This is more of a blanket, and it's associated with a contact between an Ordovician argillite, the OPA. That's a 400 million year old rock, and that's overlain by a very young tertiary volcanic of about 18 to 23 million years old. The mineralization hugs that contact zone. As you can see here, the solutions came up from the earth, hit that, it's a very porous contact, and then spread out laterally. And within this zone, you have numerous structures, and where the structures cross the zone, you tend to have veins and breccias. And it's all within a blanket of disseminated gold mineralization. So going back to that slide again, AA is the cross section, but we'll take a look at the cross section. And you can see that you have some very high grades in here. Those are the hot colors, the reds, the purples, etc. But that's all in excess of 1 gram. So you've got good continuity in the high grade zones. You also have good continuity in the lower grade disseminated zones. That's in the green, the lighter colors. And what we've got is a high-grade potential mill feed, about 4.5 million tons at 1.75 grams per ton. And then we've got about 19 million tons of heap leachable material that's running about 0.4 grams. So that's the difference on the deposit. So this is from some of our drilling earlier this year, but we had you get both these high and low grade intercepts, and we had quite a few successes. And like 2422 was a serious step out hole. It's about a 50-meter step out to the south, and it helped us to consolidate a number of these zones out here. But for instance, we hit 30 meters at 2.3 grams, starting at 23 meters deep. A lot of this mineralization is quite shallow in this deposit, but it changes as you go from the center going west. It gets quite a bit deeper. That's a down drop block. And to the east, it also dips downwards. So you've got this going from east to west, kind of a bow-shaped deposit in cross-section. So looking at our exploration upside, there's still substantial growth potential here, but we have chosen to concentrate on the main pit area. And the main pit is what you're seeing in red. That is the pit shell outline. And then outside of that, we've got numerous intercepts. They're not all listed here. Plus, we have the Midway Hills. So we actually have a block model in the Midway Hills. At this point in time, we don't have declared resource at Midway Hills. It needs additional drilling. A lot of that historic drilling we had out there stopped at the OPA argillite contact, and it needs to go deeper. But we do see upside in our ability to expand there. TG 2417 we drilled last year. It was a 600-meter step-out hole. And we drilled that on a geophysical anomaly, and we hit 0.5 gram and gold and 3.4 grams of silver. So that was basically a wildcat hole that needs following up. But what we see around this deposit is quite a few gold intercepts that future exploration. And we've taken that move because of the environment for permitting has moved very positive in the US. So it's a window that we need to jump through. We can't drill our way through it. We need to start the permitting process. So looking at the metallurgical test work on this project, we're a beneficiary of numerous generations of work. Kennecott Minerals discovered the main deposit. Newmont Gold was on this project for about 4 years. They did work, Midway Gold, and then Viva. The mineralization here is intensely oxidized. with free gold, finding coarse free gold occurring in high-grade veins and breccias. That's our mill feed. And that's all hosted in a low-grade zone of disseminated gold mineralization. So the work we've got demonstrated that we can recover coarse free gold through gravity, find free gold through flotation, and that we can recover all of the mineralization through cyanide leach as well. So we demonstrated in our column leach test that we could get 68 to 71% average gold recovery. That's on all rock types. Or we can segregate out the high grade and actually get an increased gold recovery on heap leach with just low grade. And on the mill product, if we do another grind step down to about 75 micron 200 mesh, we can get 92 to 94% gold recovery. And approximately 20% of the tons in this deposit carries about 50% of the gold. So that gives us an opportunity. The other opportunities that we have is that the Tonopah project can supply high-grade mill feed to local mills. One of them potentially is the Kinross, but that, you know, we don't have any agreements there. But that's a future concept. So looking at the PEA, the highlights, this was a conventional open pit mine running about 45,000 ton a day over a 7-year life. And then there's an additional year of residual gold leach. This would be a conventional truck loader operation. And that would feed a 10,000 ton a day crushing plant with 2,000 ton a day going to a gravity and carbon circuit for the high grade recovery, and 8,000 ton a day to a heap leach circuit. On the high grade, we see an average recovery across all rock types of about 93%. And that's about 58% of the gold ounces produced in the study comes through the high grade. And then the low grade heap leach would produce about 42% of the gold at about a 75% recovery. So 7 years of mine life, 1 year of residual leach, and it produces about 404,000 ounces of gold in a 7-year period based on what we have today. In the study, we did see a reduced strip ratio from 4.6 gram down to 3.9 in this study. So the results of the study demonstrated a internal rate of return at 240 gold that was positive. Low all-in sustaining costs and cash costs. We see a number of project optimization opportunities for this project. One of them is the potential for toll mill. This study included full owner mining. We had a formal quote from Cat Finance for the mine fleet. So, you know, we will be taking a look at contract miner operations. These are all capital deferral items. And we see opportunities to optimize the mine planning to accelerate early grade and increase early revenues on this project. And then one other item that has come to light, taking a much closer look at the metallurgy, is there may be an opportunity to go to a coarse crush or a run of mine on this low-grade heap leach. So all of these are items that we're taking a good hard look at for further improving economics on this project. The leverage on the project to the gold price is very strong. At a $3,200 gold price, we had a NPV 5% of about $363 million and an IRR of 43.4%. And now, right now, the trailing average price of gold, 3-year trailing average, is moving about $30 a month. So these prices, by the time you finish permitting, we're going to be in these sort of price ranges. So again, there's a lot of upside to this project, a lot of gold price leverage, and we see an opportunity here to actually build a mine in the state of Nevada. So next slide. Looking at the infrastructure on this project, you can see the picture. In the background is Nevada State Highway 376. That going to the right, you're going to the Round Mountain Mine, a half-hour's drive. Going to the left, you go to the town of Tonopah, about 20 minutes away. Adjacent to our site, to the east, is the well field for the Tonopah Public Utilities. It's up drainage from us. And their pipeline crosses a piece of our claim block, and the water utilities control substantial excess water rights. And so we've had some discussions there. That's an opportunity, and there's a win-win opportunity there for the town of Tonopah if we go into production. Also following that water pipeline is a 15 kV power line that can be upgraded to 25 kV, but that hooks into the Nevada grid. So we have close proximity within 2 or 3 kilometers, mile and a half of lower voltage power lines. That's key. You look at a high tension power line, the transformer drop is $1 million on something like that. On these lower voltage lines, quite inexpensive to tap into. Also on this project, back in 2003, Newmont Gold had completed an environmental assessment and cultural resource studies. From that, they were issued an exploration plan of operations. And that's currently what we're operating under. Now, since that time, what we've done is we've had our baseline needs assessment meetings with the U.S. Bureau of Land Management. They've got a very concise process. They've got checklists of baseline studies that you need to complete. And we've now completed, substantially completed our biologic studies. No red flag issues there. We've been doing a quarterly water sampling now for over 7 years. Seep and spring studies, geochemical characterization studies, updating archaeology, hydrologic pump down tests. So all of this is with the goal of being ready to move into the permitting process on this project. And that's how you accelerate permitting in the US. You have the science complete ahead of your permit applications, or substantially complete. And, that gives the regulators a basis for their permitting. And you incur very few delays when you pre-stage all of this. So our timelines on this project, we've completed and updated our mineral resource estimate. Our goals for this year include negotiations for third-party toll milling. That's both on potential high-grade ore as well as loaded carbon, contractor versus owner mining trade-off studies, optimized mine plans, geotechnical studies, and further the metallurgical program. So, and then on baseline studies, continue our ongoing program of completing the science behind all of this. And so looking at Viva as a value proposition for shareholders, we believe that the Tonopah Gold Project checks all of the boxes for a successful mine development opportunity. Our focus is on mine optimization and feasibility studies, accelerate revenue production while reducing capital costs. And then finally, using all of this to create a re-rating of Viva shares in the marketplace. That's value. So I'm ready to take questions here. Let me look at the question box. Okay. Let me just find my box here. Here we go. So question number one, what improvements to the project do you anticipate in the feasibility study? Well, one of them, we're going to take a good hard look at the crush size on the heap leach. Every indication is that we can go with a coarser crush than we have in the feasibility study. That'll help to both reduce cost, which would reduce cutoff grade and increase resource. But it would also reduce capital in terms of plant requirements. Second would be, third-party negotiations for tolling. Let's see. I've got to change my box here a little bit. And those are key points. Let's see. Here's another one. Do I plan on buying any VAU shares in the open market after the share price drop? I have been buying shares. I've just had to move some money into an account. I can buy shares, and I'm doing so. Why do you think the market reacted so poorly to your PEA? Well, part of it, and I've had this in past companies where you transition from exploration focus to more of a development focus. You get a sell-off of some of the exploration focused investors to the more development focused investors. Other than that, I think it's it's just poor-sightedness. I think there was a large non-institutional shareholder who probably did sell, and I think they're pretty well out of stock, but there we have it. What are the milestones and timeline for re-rating of Viva? Well, the milestones are pretty simple. We do have to, at some point, raise some cash, but it's moving into that feasibility work and moving ahead with continuing to value add the project, reduce the risk, and moving it forward. Got a question here. What are the miles? Let's see, I got questions are jumping around here a little bit. So in terms of the timeline, it's going to be completing a feasibility study here, provided the financing is there, will take over a year. As part of the that process, in terms of the feasibility study, you also create a mine plan of operations, and that's what we would submit to the regulators to initiate the permitting process. Now, there's a question here: are you considering applying for Fast 41 permitting if eligible? Yes, we would consider that, but I believe that we're pretty well set up to move through a rapid permitting process regardless. And that's on the basis of the fact that we've completed an awful lot of the baseline work here. Next question is, how much cash does Viva have in the bank right now? Well, we've got north of $1 million. We've been conserving cash and bringing in through some transaction on our cell tower property. We've got some additional cash through that as well. What levels of cash are you looking for in the next 12 months? Well, basically, the pre-feasibility study on this project will cost around $1 million. There's probably $500,000 worth of metallurgical work that is required. Okay. So that's the type of funding we need, probably in the range of $3 to $5 million. Anyway, the webinar is over. I'd like to thank everybody for attending today. And yeah, please keep an eye on Viva and buy our stock. It's a bargain price today. And, you know, there's a lot more upside to this project than there is downside. Thank you very much.